Are you a real estate investor who's interested in oil and gas investing and have heard about the tax benefits? Hey guys, this is Naomi Brown. Today we're going to talk about how real estate investors can invest in oil and gas. I'm out here along a natural gas pipeline, and natural gas is a huge resource here in Pennsylvania and will help to fuel the increasing need that we have for electricity and energy as we enter a new AI era. So there's four basic ways that a investor can get involved in the oil and gas industry. And the first is a direct participation agreement. Now, a direct participation agreement is just that. You are an active participant in what is considered being at risk for a investment within oil and gas drilling and exploration. Now, the key here is the fact that you're at risk. So that means that both the losses as well as the income for the property is considered active income. So this can be very beneficial if you have a W-2 job or a lot of income from a business that's active income, because this can help to counteract your active income with a loss and reduce your taxes. The second way that you can invest in oil and gas industry is through limited master partnerships. Now, these are investments that are actually traded on exchanges throughout the U.S., and because they're actively traded, they are more readily accessible and more liquid than a master limited partnership. So they do offer some tax benefits, but not as significant as a master limited partnership. So a limited partnership arrangement is a tax benefit from the aspect that you can take a depreciation deduction of 15% off of that income, similar to a depreciation deduction for real estate. And it is a pass-through entity, so it is not subject to double taxation the way a traditional stock would be, where the company pays taxes and then pass a distribution on to you, and then you pay taxes again. So that can be a favorable tax treatment as well. The third way you can invest in oil and gas industry is through mineral rights. Now, mineral rights are unique in that they are eligible for 1031 exchanges. And that is because they are actually real estate. You hold a deeded interest in the real estate and the rights underneath the ground for oil and gas. So it can be a great way to do a 1031 exchange to have passive income. And the tax benefits of a mineral right is that you do get the same depreciation or depletion allowance of 15% each year on that income. The fourth way you can invest in the oil and gas industry is through ETFs and mutual funds for oil and gas companies. So this is going to be similar to traditional investments in the stock market, but it can be a great way to gain some exposure and be able to get acclimated and a little more knowledgeable about the oil and gas industry. So if you're a real estate investor and looking for creative solutions and growing your wealth throughout Pennsylvania and Maryland, please contact us, and we'd love to be able to assist you in furthering your wealth and your knowledge. And if you found value through this video, please like and subscribe, and we'll see you soon.